All right, hey there students. So in this video today, I just want to show you about land. What costs do we capitalize into land and what costs don't we capitalize? There's a lot of them, so be prepared to take some notes in this video. You have to know these specific rules for land. Now first off, let me show you just a general overview of fixed assets. So with the costs of fixed assets, or you can call it long-lived assets, you capitalize certain costs. Now which costs do you capitalize? So there's a general rule here for all the fixed assets. This is a good rule. Whatever gets the asset ready for its intended use. So whatever you're going to use it for, if there's costs that you need to go ahead and incur to get that asset ready, usually those costs would be capitalized. Now, if you can get that asset ready, it's ready to go and you can use it, and then you have other costs along the way, usually those costs are not capitalized. I hope you understand that difference. Whatever gets the asset ready, those costs are usually capitalized. And then obviously, if they're not capitalized, some costs are expensed. Okay, so let's talk about land now. Now, with land, you're going to add the following costs to the asset of land. You put it on your balance sheet. Here they are. The purchase cost, that's pretty obvious. Whatever you buy it for, put that cost on your balance sheet. Closing costs. So if there's any costs involved where you have to close out at the end of the sale, that's usually added. Costs incurred to get the land ready, we'll talk about that. And then inherited costs, we'll talk about that too. So, purchase costs, it's pretty obvious what that is, right? How much to buy that land? So, or they also call it acquisition cost. So the cost to acquire that land, whatever you bought it for, whatever it's being sold for, you buy it, that's the purchase cost. Closing costs. So we talked a little bit about this. Here's a few of them. Title insurance, attorney's fees, legal fees, real estate commission, recording fees. So all of these fees are usually necessary to close out that sale. That's just how it goes. When you buy real estate, there's going to be some costs that you have to close out that sale. Got to get your title insurance, make sure you have insurance for that land. You got to pay an attorney to do his work. You got to pay a real estate broker to do their work. And recording fees, anything you got to record down that you can't do yourself. Those are all costs associated with closing out that sale of land. And those costs are capitalized. They're added to that purchase cost. All right, costs to get the land ready. So you got to get that land ready, right? You got to do a lot of things to get the land ready for its intended use. Now, what is that? Demolition. So anything that's already on the land, say there's an old shed or an old building, and you don't need it, you want to get rid of it. So you got to demolish it. The cost to demolish that old building that's on that land, you need to get it off of it, right? So that's getting that land ready. They call it demolition, or sometimes they call it raising. So you got to know it by both names. So demolishing something that's on a piece of land, they call it raising or demolition. Grading, that's just getting the land ready. There's some work that has to be done on the land itself, so they grade it. You don't have to know too much about the definitions. So grading's another one. Filling, you got to fill in certain parts of the land to get it ready. And draining, pretty obvious here. So these are good for note cards. Write them down. Specific costs that you capitalize for land. Again, you add all of these costs to the cost of land. And then clearing. Got to clear out some old trees or whatever it might be. That's a cost too. And then city assessment. Someone comes in, has to assess the land, make sure that it meets criteria. That again is a cost getting that land ready. All right, inherited costs. What's that mean? Well, stuff you inherit when you buy the land. Property taxes from the previous owner. you accrue that, right? So if the previous owner had property taxes he didn't pay yet, you got to go ahead and add that into the cost of your land. Property tax time. So tax liens, that sucks right there. What that basically is the previous owner didn't pay his taxes. So what happened is the IRS is like, dude, pay your taxes. And then he doesn't. And then they penalize him. And then he doesn't pay again. And those taxes go into delinquency. And he still doesn't pay. And then now they roll it into a tax lien, which is expensive. So when you buy land, sometimes you inherit the previous owner's shortcomings, if you will. So it's a tax lien right there. And then mortgages. So these are inherited costs. You can capitalize these, put this into the asset as opposed to expensing it. Not too bad. Okay, so next, what costs do we deduct? So we went over all the costs that we add. What do we deduct from the cost of land? There's only really one cost. Proceeds from demolition. So when you demolish an old building or an old shed that might be on that land, and you can actually salvage some of those materials like wood or brick, you can take those materials and then resell them. If that happens, you have to go ahead and deduct it from the cost of land. You can't add it, because again, what's happening there is you're getting rid of something on the land, but you're benefiting from it. So they make you deduct that cost, as you see here. That's the only one you deduct. Everything else you would add. All right, land improvements. What is this? Well, this is actually not capitalized. So you actually charge it to what they call land improvements. It's a separate account under property, plant, and equipment. So it's still on there on the balance sheet, but you don't capitalize it. You don't add it to land. It's a separate account entirely. So parking lots, driveways, fences, sidewalks. These are land improvements. So again, you do all that stuff, right, to get the land ready. You capitalize those costs. Then once the land is ready, you make additions, right? You add stuff on, like parking lots, driveways, fences, sidewalks. Those stuff that you add on, that's a land improvement. It's not capitalized. It's charged to a separate account under property, plant, and equipment. You have to know that. And again, we'll practice this a lot in our test questions, but please take notes, write down some note cards, get these rules familiarized. And yes, these have limited lives. So that's another reason why they're not capitalized, is because their lives are limited. That makes sense, right? You build a fence, it's not going to last forever. So it's a limited life land improvement. Don't capitalize it, just charge it to a separate account under property, plant, and equipment. Okay, that's about it for land. That's a lot of stuff. We went through what costs do we capitalize or add to the asset. It's a lot of them, so please rewind if you have to. Hope you're taking notes. Then we figured out, what do we deduct? That demolition proceeds. So you demolish something, you get some proceeds from it, you deduct it from the cost of land, and then now you have land improvements. You charge that to a separate account under property, plant, and equipment. You do not capitalize it. So hopefully that was helpful. Thanks for watching, and I'll see you in the next video.